This is Brad Wolf, and this is the end of day E-mini review for August the 16th, 2022. As you can see, Al marked on the chart at the very top, reversal up from below triangle, then wedge top. So here on the open, we had a triangle. We broke below it on this bear breakout here, and then we reversed up with two legs. This was the start of the reversal up, and really this was the strong breakout that led to a bull trend day. And the bull trend day did not last all that long and sold off late in the day. So if we take a look at the open, the first piece is we had a big bull bar and a bad follow-through bar, and then a few bars sideways to down. Typically on the open, the market will go sideways. So when you have a big bull bar and it's below the moving average, your expectation should be that the market is going to go sideways more than it is going to have some sort of trend from the open up or down. The bulls tried for a double bottom, however, the entry bar was bad and the market broke below this tight trading range here, and the market started to contract. It started to form a triangle. You could say it was here, 1, 2, 3, 1, 2, 3, 1, 2. It doesn't matter. A tight trading range is a triangle, and it has the same forces. It's a breakout mode pattern. Now the bears tried to break below the trading range here, right here, and they got a good breakout bar, but you need follow through. As strong as this breakout was, there was no follow through. If you actually look during this bar, you'll notice that you can tell just from the close of the bar, there was only a 1 or 2 tick tail below the bar, so everybody bought the close of this bar. Here, strong entry bar. A lot of the bears that sold the close got trapped, so when they see the bad follow through and then this bar, these bears that sold this close are going to scale in higher, and they're going to be happy to get out break even, which was this price right here. The bulls, they're buying, betting on a wedge, 1, 2, 3. They're also betting on this failed breakout of this triangle here. And the bulls will buy. They'll buy above here. They'll buy above this high. Now, if they are buying here, the stop's far, and many will scale in. Some bears sold this high up here. They'll scale in. And you can see right here, this low actually did not reach here. So a lot of bears that sold, scaled in, got out break even right here. The bulls had a surprise bar here with strong follow through, and it broke far above the range. This trapped all the bears that sold. They sold here, or here, or here, up here, and here. And you can see this bear bar, these bears that sold anywhere were desperately trying to avoid a loss. The bulls that bought were happy to buy any pullback. So they will be more than happy to buy a bear bar, which is why Al marked you could buy above here, and you could really buy any of these bars. What's the odds that this was going to be a second leg trap? Leg 1, pullback leg 2. Well, after these two strong bull bars breaking above a trading range here, the odds are the market was going to get a second leg up and probably some kind of measured move. Maybe of these bars, maybe of the opening range here to here, or from this low to this measuring gap. Bulls, they'll buy above bars here, 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 and even here. Now if they buy here, it's a possible breakout of a wedge, but any pullback is going to be minor. So a bull that did buy here, they would get out maybe as this bar started to turn down. The better way to probably manage it is for the bulls that bought here to use a wide stop somewhere down here and buy more lower, maybe down here. Some bulls will get out below here, but if they did, and they're trading always in, they would have to buy again here. Those same bulls could get out below this bar, they could get out below this bar, but either way, they're going to look to buy relatively quickly. At this point, the market was likely to be in a trading range, so bulls will buy, betting on a retest up here. The channel up was fairly tight, gap here, so it's basically a small pullback bull trend on a smaller time frame, and the bulls got a strong breakout bar. And whenever you have consecutive buy climaxes here, 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 this is a buy climax. Bulls are going to be quick to take profits, especially on strength here. The odds also favored that we were going to get below the moving average, so a lot of bulls would get out of longs below this bar, certainly below this bar, and bears would start shorting. This was a surprise bar, so bears will sell below it, maybe stop up here or up here. Nobody expected this strong of a breakout. However, at this point, the market was clearly always in short, so traders will sell below, sell the close, sell this low. They would not sell this low, but they may be willing to sell a pullback. Now, the problem the bears have is the odds are the day is going to enter a trading range and not form a strong bear trend and fall below these lows by the end of the day. So we could easily get a pretty deep pullback and the bears may run out of time. So a lot of bears would buy back shorts somewhere above here. Some bought back shorts at this low close down here. By this point, most bears were not eager to sell because this channel up was tight. Some would sell here and bulls would take profits, but again, it's the end of the day, so there's not a lot of time for a swing trade. And as you can see, the market closed around the middle of the day. Thank you for watching this video. If you enjoyed this video, please go to the brookstradingcourse.com website where you can find more information on the daily blogs as well as find out more information on the Brooks Trading Course. Thank you.